Buying real estate has nothing to do with passive income and everything to do with reducing your taxable income down to zero. Let me explain. So if you're like me, you probably read the book Rich Dad Poor Dad. You stumbled across the Bigger Pockets forums, and they're all telling you the same thing. Just buy more houses so you can have passive income. I was so gangbusters for that idea that when I quit professional baseball, I had my financial freedom because I had 10 houses. I was bringing in $4,100 a month of passive income, and it was enough money to exceed my monthly expenses because I was single and didn't have any kids, and so I could live my life how I wanted. I could be on the beach drinking Mai Tais, doing whatever I wanted. Very quickly, you discover that you're not going to be a real estate mogul doing things like that. So what I decided to do was continue to read and study this real estate investment idea. And I discovered a book called Tax-Free Wealth by a guy named Tom Wheelwright. You got to check it out. It's by Robert Kiyosaki's, he's Robert Kiyosaki's accountant. And in that book, chapter 7, he goes over this idea called depreciation. And very simply, depreciation is just a phantom expense. It's a passive loss against your income on a piece of real estate. So imagine you buy $1 million property and the building throws off $25,000 a year after all your debt service and all your expenses. And what is called a straight line depreciation, you can take it basically over 39 years. It's about 25 grand a year of depreciation. So on that building, if you made 25 grand, you just lost 25 grand on paper. So you make no money. So you don't pay any taxes on that income. Well, in 2016, President Trump passed the Jobs and Tax Cut Act. And there was an idea in there called bonus depreciation. And without getting into the weeds about cost segregations, that's for a whole other video. But what you can do essentially now, instead of taking 25 grand a year, you can actually take closer to $200,000 a year on the same building. And so now what I've discovered is there's a thing called a real estate professional status. And it's very simple. You have to be in real estate for 750 hours a year, and you have to spend over half of your time in real estate. So you're probably thinking, well, I'm a W-2 guy, I'm a 1099 guy. How am I supposed to qualify? Well, that's where your spouse comes into play, and he or she can actually be the real estate professional guy or gal for you, and you can file your taxes together, and you can take that passive loss against your active income. Let me give you an example. Let's say that you are an engineer and you make $200,000 a year. It could be more, could be less, whatever. Could be a teacher. You could be in construction. It doesn't matter. You make $200,000 a year. You buy this $1 million building. Forget the creativity. Forget all the cute ways to buy property. That's not the point. $1 million that you purchase. Your spouse becomes a real estate professional. You now have a passive loss because of bonus depreciation of $200,000. You lost on paper 200 grand. Your income, remember, was 200,000. Your employer is probably withholding $85,000 to $90,000 for taxes, maybe a little bit less. What's going to happen is you made 200 grand on paper, you lost 200 grand on paper. And what you're able to do with a real estate professional status is allows your passive loss from the real estate to offset your active income. That's where it gets so badass. So you made 200 grand, you lost 200 grand, it equals out. You didn't make any money on paper. So now all that money that your employer was withholding is now refunded back to you or reimbursed back to you at the end of the year. So talk about it. The real estate is awesome. You made 25 grand in passive income. That's cool. But you just made an extra almost $90,000 in a tax refund just by buying a piece of real estate and understanding the tax laws. At the end of the day, if you are paying a ton of taxes, I haven't paid taxes in a lot of years. If you are paying taxes, it's not necessarily, you're not getting penalized. You're just not utilizing the tax law. You're not understanding that it is a list of incentives. That's all it is. Invest in oil and gas. Invest in real estate. Start businesses. That's where you get all those deductions and those subsidies, because everybody else is just working for somebody else. They're an employee. But when you work for yourself and you become this real estate professional and you buy these buildings, you are essentially able to wipe out your income tax. If you really want to get cute, you can start introducing a life insurance policy loan and totally protecting your money from Uncle Sam and litigation. And that's a whole other video too. But that's the way that I've discovered is the best way to never pay taxes on any of your money for the rest of your life. If you want to learn more about commercial real estate, not paying taxes on any of your income, give me a follow because it's all I talk about. See you then.